The World Bank estimates that the African Continental Free Trade Area (AfCFTA) will increase Africa's income by $450 billion by 2035 and increase intra-African exports by more than 81%. Experts say the full implementation of AfCFTA could further boost trade by 29% at an annual growth rate of 3%. This anticipated trade expansion outpaces the global average, with specific routes such as the East Africa-South Asia corridor leading the way with a remarkable annual growth rate of 7.1%. Furthermore, the adoption of digitalization and digital supply chain financing is predicted to be a game changer that could unblock billions of dollars in export value across key African markets by 2035. And away from that, Boa Cement has announced a significant price reduction for its cement, slashing the factory cost to 3,500 naira per 50 kg bag, effective from 2nd October 2023. But despite this official declaration, the anticipated price drop has not yet materialized in primary markets, notably in Lagos, where cement products are still being retailed at the previous rates of between 5,300 naira and 5,500 naira. Retailers and cement distributors have confirmed that the promised price reduction is yet to come into effect. Various challenges, including logistical issues and operational costs, have been cited as reasons for the delay in passing on the reduced prices to consumers. In a new development, England's King Charles is set to attend a technology showcase in Nairobi, Kenya during his state visit from the 31st of October to the 3rd of November 2023. This visit aims to celebrate the strong relationship between the UK and Kenya and the partnership between the two countries. King Charles III will meet with Kenyan entrepreneurs, highlighting Kenya's vibrant tech ecosystem, which ranks as the third best in Africa and the first in East Africa, with over 1,000 startups across various sectors. The growth of Kenya's startup ecosystem can be traced back to 2006, following the deployment of an underwater internet cable, which boosted connectivity and spurred the establishment of the first startups. Notably, the visit aligns with Kenya's preparations to mark 60 years of independence. Moving on, China has saved nearly $10 billion this year due to record purchases of oil from countries under Western sanctions, including Russia, Iran, and Venezuela. The unintended consequence of sanctions imposed on these countries has been to lower oil import costs for Chinese refiners. China's purchases from these three countries amounted to 2.765 million barrels per day of crude by sea in the first 9 months of 2023, displacing alternatives from other regions. Although they represent a small portion of China's overall oil import expenses, these savings have greatly boosted independent refiners.